From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 13th, 2016. If you're not already aware of it, there are several high-impact news events over the next few days, and this is a good time to evaluate your risk management practices to ensure sustainable trading. In a moment, we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc for today's trade analysis, but first to recap a couple of the suggestions made over the past few days. Starting here on the NZD USD, New Zealand dollar, US dollar, I still believe we're in the right direction, the right trade, but the market is just kind of drifting against the US dollar, I think. I think that's kind of expected before you have high-impact news, as we're expecting out of the US tomorrow, that we could see a little bit of a pullback as the market kind of recoils before that high impact news. So as it drifts a little bit higher, we do see an opportunity to go short in the direction of what we have been studying as the direction to trade in, which has been looking to trade short underneath the long-term blue trend line that we see here, the retest of that trend line, 100 period moving average. Several reasons for it we discussed in the live trade room yesterday. It's pulled back against us, so we'll consider exiting the trade if it continues to move higher, but we have a stop loss in place to protect us in case the market suddenly moves higher. But we definitely would like to see some more bullish price action for the US dollar over the next 24 hours prior to tomorrow's news. Similar situation over here on the AUD, but a little bit better off on this one. We're sitting underneath or right around the green shaded area, the 74.90 or so, just underneath 7,500 level. Take a look at the blue box right there. If we zoom in, you can see the market has continued to find sustained resistance into or just underneath the 7,500 level, 74.90. So we continue to wait to see if the market will do what it's been doing for the past 2 weeks, is find resistance here. If it doesn't, if it breaks, then of course we have practices, risk management practices in place to get out if the market continues to pressure back higher for the Australian dollar. But still holding those two trades from yesterday. Now let's move on over to the dollar franc. We're going to move on over here, and this is becoming an opportunity I think we could be interested in. Obviously, the trend for the past several weeks since basically the U.S. election has been up. But over the past week and a half, 2 weeks, we have seen the market in congestion. I think it's preparing for the potential volatility that we're looking at over the next couple of days. S&B, FOMC, all of that could provide significant volatility on the dollar franc. So we want to be watchful. We want to use appropriate risk strategies in all cases. But I think we're at an interesting area for a potential day trading opportunity into the green shaded area in the middle of the black box, top right hand corner of the chart, and in the direction of the trend. Clearly, of course, like I said, the trend is up, and that's what we want to focus our efforts in until something changes, which I believe to change that, we'd have to break the blue trend line, break underneath that black box before I would begin looking for opportunities to go short. So I'm focused in on buying this currency pair on dips into support. We talked about this yesterday in the trade room, actually, that if we're going to look for a buy here on the currency pair, we wanted it to go down or break through resistance. So it either needs to break above the orange zone or dip back down to the green or yellow shaded area close to the long-term trend line. So that's what we're looking at today. It's come back down towards the 1.0115, 1.0095 green shaded area. So that's where I'm looking to take an intraday buy scenario here for this currency pair. Look back to the left. It's not too hard to see what the market has done with this green shaded area before. You see resistance at the orange zone, support at the green zone. Sure, it did break underneath it for a period of time, but this is what I'm looking at. We're looking at 1, 2, 3, 4, 5, 6, 7 days where it bounced around between the green and orange shaded area. So that being said, if we're looking for a similar scenario today and going into the high volatility news over the next couple of days, we're looking for a buy here into the green shaded area, targeting the orange zone again like it did back here. And if we can get that breakout above the orange zone, we'll look for the market to continue to pressure in the direction of the trend. And really, the only thing that will concern me about this is if it breaks underneath the 1.0055 level, underneath the yellow zone. So as long as it hasn't broken there, I'll be looking to go long here on the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.